Good day, everybody. Today is 6:25 Eastern Standard Time. Date is March 15th. In this video, I want to address something that might be crossing your mind. Here at this article here, we have CNBC.com. Forecasters see growing chance of a recession as Fed hikes rates this year to fight inflation. You can see also here, U.S. stock futures are flat ahead of Wednesday's Fed meeting. So also, another impact here is this one, found on mining.com. Gold prices extend decline ahead of Fed policy meetings. There's a couple of big bullet points to take away from here. First off, gold has dropped off over the last 3 days, as mentioned here. Oil has dropped off. This is why my system's not picking oil and gold right now, because of the inflation, as I reported to my paying members on the quant analytics, is that with the market indices starting to show some strength, it's starting to I'm not saying it's going to reverse. I don't think it will, but if it does, then all my defensive instruments are up in the air right now in terms of performance. So let's go through this article here on mining.com. So as I said, spot gold fell 1.4%. So over those gains, the last 2 weeks are gone for gold. So this is why gold, I don't think, is the number one asset out there. It's why you got to tightly watch your portfolio and your mix of what you have in your portfolio. And a lot of people say, well, that might not be wise. That's true, but you can get collapses in prices. As you said, you just lost 2 weeks of performance with the gold on this article. So this is, everything's all revolving around the Fed. Now, let's go through this big factor. I always come back to this one here at the usdebtclock.org. You can see here U.S. national debt is climbing at $30.3 trillion. I always refer to the number of taxpayers versus the population. You cannot tell me long term that the inflation is going to drop off. It may taper off. Might not be at 7% each month, but it may drop down to 3%. Plus you have the national debt, which will continuously drive up as these crazy U.S. politicians and the government just use the government like a piggy bank and never think about long-term implications on 3-5 years down the road, let alone generations, because it's a huge impact negatively, because we've never reached this level of debt historically, and the only way to get out of that is either raising rates, is what we're talking about, or wars. So you decide. So again, here back on the CNBC article again, forecasters see growing chance of a recession as Fed hikes rates this year. Meeting coming up tomorrow. I've heard on Bloomberg they're saying up to 5 to 6 increases, rate hikes later this year. They're going to do it regardless of where the economy stands, because now the inflation is kicking into high gear, which means inflation will become, or the interest on the inflation, or the interest to service this debt will be the largest, call it budget government program, even though it's not official, and it'll be bigger than the military budget for the U.S. and so on and so forth. So they need to get a handle on this. Now, will that lead into recession? Here's a probability of recession in the next 12 months. Now, by definition, I think it's 2 quarters of negative growth, or lack of growth. Negative is defined by U.S. Here in the EU, it's higher at 50% right now for the next year. So we may go into a slowdown, even a negative quarter, and the following quarter may, boom, we haven't even factored in the global sickness as well on that. And we're already seeing here tax impact. Higher commodities is likely to slow the pace of hiking more than the inflation impact to accelerate it. That's interesting, but I'm not seeing the inflation of a lot of agriculture. We've already seen the decline of oil as well. So those pressures might not be as prevalent in the next few months. But the financial situation is not looking good either way. Number of Fed hikes expected. So this is where we're at. 5 to 7 at 48%. I think I was pretty struck that this was pretty aggressive, but I think this is more realistic. But each of these rate hikes may be bigger, like not 0.25%, but maybe 0.5% or a full percent. Who knows? But it does have that impact. So global sickness is one thing to worry about. Another is obviously the Russian situation as well. If the NATO gets sucked into that as well. Anyways, I'll let you read these articles. And again, these are what I just hinted at on CNBC and mining.com. But this is the big factor right here. And Fed's in control of where things play out. Again, if you're into what I do, just get on our mailing list, daily newsletter, quantlabs.net/contact. Fill all your info with email and get on that list. We shall talk to you there. Thanks for watching.